moved, specifically U.S. markets, how U.S. markets have moved on Friday. Now remember, we did have a jobs data that was weaker than expected, and that has sparked, recessionary fears. And also on the back of that, we did see the U.S. market fall. On Friday, if you see Dow Jones, that was down 220 points. That traded down almost 0.4%. S&P 500 lost 0.3%, and Nasdaq was very, very marginally in the red, but nonetheless ended the day in the red with minor cuts of 0.03%. Also, the U.S. economy created 22,000 jobs last month versus an estimate of 75,000 jobs. So a big downtick is what we saw in the jobs data. Also, the July job data was revised to 79,000 versus the 73,000 earlier, and the U.S. employment rate for the month of August stands at 4.3%, which is a 4-year high, and the expectation of rate cuts has increased in the September Fed policies. What the street is penciling in. And as far as the U.S. bond yields are concerned, the 10-year bond yield is now below 4.1%, and the 2-year is trading below 3.5%. So on the back of the jobs data, that was a bit of a disappointment as far as Wall Street is concerned. We did see a downtick coming in on U.S. Wall Street on Friday.
Absolutely. So Wall Street did end on a tepid note on Friday. But moving on, and let's take stock of how the commodity markets are shaping up. Now, oil prices, as we discussed, edged slightly higher this morning after last week's decline, as OPEC Plus has agreed to modest supply hike for the month of October. Now, Brent crude, that climbed towards the $66 per barrel level, whereas the US WTI, that traded near the $62 level. Now, this group will add just 137,000 barrels a day, a smaller increase than previous months. Now, this move particularly signals caution as the market grapples with fears of supply glut, with the IEA warning of a potential record surplus next year. Brent is already down more than 10%, as much as 12% this year, pressured by rising supply and weaker demand outlook. So that's about oil, but let's also put the spotlight on the yellow metal. Now, gold is holding near its record highs, trading close to that $3,600 an ounce mark. Now, remember, this rally comes after Friday's weak U.S. jobs report, which reinforced bets on Federal Reserve's rate cuts. Traders are now pricing in almost 3 reductions this year. Now, lower rates boost the appeal of non-yielding assets like gold, which is also drawing strong safe haven demand amid geopolitical tensions and concerns over Fed's independence. Adding to the support for the yellow metal, China's central bank increased its gold reserves for a 10th straight month. So that's about the commodity markets.
All right, with that, it's time for a quick breather. Don't go anywhere. After the break, we'll get you more updates and